Welcome back to the Pro Ticker Podcast, everybody. Your Tuesday morning edition covering major financial magazine headlines.
Yeah.
Today, we're diving deep into global markets and unpacking some pretty significant developments that have been making waves.
Definitely a lot to cover today.
Yeah.
The financial landscape is shifting,
Yeah.
and there's quite a bit of uncertainty in the air.
Let's kick things off with the trade war that seems to be escalating.
Okay.
Bloomberg reports that President Trump just dropped a bombshell by imposing sweeping new tariffs.
Right.
We're talking a 25% tariff on goods from Canada and Mexico,
Wow.
and an additional 10% on top of existing tariffs for Chinese imports.
Yes, and it seems retaliation was swift.
Oh.
CNBC reported that China is hitting back with tariffs up to 15% on U.S. agricultural products.
Okay.
Canada isn't standing still either.
Right.
Targeting $107 billion worth of U.S. products with tariffs, as reported by Bloomberg.
Wow.
This all really points to Trump's larger strategy to reshape global trade, a strategy he's been pursuing since taking office.
So what does this trade war mean for us as investors?
Well,
What are we seeing in the markets?
according to Bloomberg, European markets,
Okay.
particularly automakers, are already feeling the heat and showing a decline.
Yeah.
There's concern they might be the next target.
Uh,
The S&P 500 is expected to open flat, but it's a tense situation.
and Bloomberg also highlighted the impact on oil prices,
Right.
which are falling due to both these trade war concerns and the OPEC Plus decision to revive oil production.
Yeah.
Brent crude is heading towards $70 a barrel.
Okay.
For those who might not know, OPEC Plus is a group of some of the world's biggest oil-producing nations,
Right.
and their decisions have a huge impact on global energy markets.
Absolutely. This is where seemingly unrelated events converge and create a ripple effect.
Yeah.
And speaking of ripples, the Mexican peso is also taking a hit.
Oh.
Bloomberg reports it's down to a one-month low as investors react to the tariffs and try to gauge Mexico's next move.
Interestingly, the Canadian dollar is showing some strength after 7 straight days of decline,
Hmm.
which Bloomberg suggests could be due to investors seeking a stable haven.
Okay.
But U.S. Treasuries seem to be the real safe haven right now.
Yeah.
They've been outperforming stocks since Trump's election, and 10-year yields even hit a 4-month low.
Interesting.
It seems like a lot of people are looking for stability amidst this uncertainty.
That's understandable when global markets are in flux. Investors often flock to safe haven assets like U.S. Treasuries or gold,
Uh-huh.
which are seen as less risky during turbulent times.
Okay.
But this trade war is creating a very complex situation.
Yeah.
The Wall Street Journal pointed out that while China's retaliation has been measured so far,
Right?
potentially avoiding a full-blown trade war,
Right.
the impact on the U.S. economy is a significant concern.
Right. Some economists quoted in the Wall Street Journal suggest these tariffs could add pressure to an already weakening U.S. economy,
Yes?
especially with manufacturing activity slowing down. So it's not just about tariffs, it's about understanding the wider economic context in which these decisions are being made.
Absolutely. We're not just talking about abstract numbers here.
Right.
These trade wars have very real consequences, and Bloomberg brought one to light that might resonate with a lot of us.
What's that?
Coffee shortages.
Rick.
Rising coffee bean prices, fueled by crop issues in Brazil and Vietnam, are leading to empty coffee shelves in Europe.
So the coffee shortage is real,
It is.
and it's a good example of how global events can impact our daily lives in sometimes unexpected ways.
Yeah.
This brings up an important question. Are there any potential winners in this scenario?
There are always two sides to every coin.
Okay.
While some industries are struggling, others might actually benefit.
Okay.
Bloomberg highlighted Canadian copper miners as a potential bright spot.
Why is that?
Well, Scotiabank is actually bullish on companies like Capstone Copper and Teck Resources.
Okay.
A weaker Canadian dollar makes their exports more competitive, so
Oh,
they
really?
could see increased demand.
So for investors willing to take on a bit more risk, this could be an opportunity worth exploring.
Precisely. It's about understanding the interconnectedness of the global market and recognizing that even in times of turmoil,
Yeah.
there are potential opportunities for those who know where to look.
We've been talking a lot about the trade war,
Right.
but there are other factors influencing market movements as well.
Yeah.
For example, Bloomberg published an article about the EU's proposal to extend $150 billion in loans for defense.
Okay.
This move, triggered by Trump's withdrawal of U.S. security support, has sent European defense stocks surging.
Interesting.
It's a completely different sector reacting to global shifts.
It shows that while uncertainty might be the prevailing theme,
Yeah.
there's still room for specific sectors and companies to thrive.
That's a good reminder that we need to look beyond the headlines and dig a bit deeper to see the full picture.
Exactly.
Right.
It's about connecting the dots and understanding the underlying trends.
Okay.
For instance, Bloomberg reported that Sycamore Partners is considering taking Walgreens private in a deal worth around $10 billion,
Really?
which could lead to a breakup of the company.
Wow.
This is just one example of how private equity is playing a significant role in reshaping the market landscape.
That's a fascinating story.
Yeah.
We'll definitely have to unpack that one further later in the deep dive.
Sure.
But before we do, let's switch gears and talk about something that's always captivating the crypto market.
All right.
Bloomberg reported that President Trump announced a strategic crypto reserve,
Oh, wow.
which will include not only Bitcoin and Ethereum, but also smaller altcoins like Solana Cardano and XRP, as noted by MarketWatch.
Interesting.
This move has sparked quite a reaction in the crypto community.
I bet.
Some enthusiasts, according to MarketWatch, are pushing back against the inclusion of these smaller tokens,
Okay.
arguing that it undermines Bitcoin's image as digital gold.
Yeah, I see that.
Their concern is that adding more volatile tokens to the mix could muddy the message about Bitcoin's long-term value.
Yeah.
It seems like the crypto market, despite its decentralized nature, is still very much influenced by the actions of governments and traditional financial institutions.
Indeed. And it highlights how interconnected all these different aspects of the financial world are.
Yeah.
What happens in one sector can have ripple effects across others, sometimes in unexpected ways.
Well, we've covered a lot of ground already,
Yeah, we have.
from trade wars and currency fluctuations to coffee shortages and crypto reserves.
And we're just getting started.
That's right. So buckle up, everyone, because we've got much more to explore in this deep dive.
I'm ready.
We'll be right back after a short break.
Welcome back. Now that we've laid the groundwork, let's delve into some specific market trends and indicators that are worth paying attention to.
I think a lot of people are wondering what this all means for their own investments. Is it time to play it safe, or are there still opportunities out there for those willing to take a calculated risk?
That's the million-dollar question, isn't it? And it really depends on your individual risk tolerance and investment goals.
Right.
But there are some signals we can look at to get a sense of where things might be headed.
Okay.
For instance, MarketWatch had an interesting article about options traders who are actually betting on a stock market crash. They're snapping up contracts that would pay off big if the S&P 500 takes a serious tumble.
That sounds pretty ominous. Are they just being overly cautious, or are they seeing something the rest of us aren't?
It's hard to say for sure, but MarketWatch did mention that demand for these crash protection contracts surged last week.
Okay.
According to data from Cboe Global Markets that suggests there's a growing sense of unease among some investors.
It definitely gives you pause. So what are some concrete things investors can do to protect themselves in this kind of environment?
Well, diversifying your portfolio is always a good idea.
Yeah.
Don't put all your eggs in one basket, so to speak.
Right.
Consider adding some safe haven assets like gold or U.S. Treasuries.
You mentioned safe haven assets earlier, but for our listeners who might not be familiar with the term, could you explain what they are and why they're considered less risky?
Of course, safe haven assets are essentially investments that tend to hold their value or even increase in value during times of economic uncertainty or market volatility. They're seen as a safe place to park your money when things get shaky.
Okay.
Gold has historically been a classic safe haven, as has the U.S. dollar.
Yeah.
U.S. Treasuries, which are essentially loans to the U.S. government, are also considered very safe.
That makes sense.
Yeah.
So if I'm feeling nervous about the market, maybe I should consider shifting some of my assets into gold or treasuries.
It's always a good idea to reevaluate your portfolio in light of changing market conditions.
Yeah.
And remember, it's not just about protecting your investments, it's also about looking for potential opportunities.
Right.
We talked about Canadian copper miners earlier,
Right.
but there might be other sectors that are poised to benefit from the current turmoil.
Any specific sectors come to mind?
Well, the European defense sector is one to watch.
Okay.
As we mentioned before, Bloomberg reported that European defense stocks are on the rise due to the EU's increased focus on military spending.
So while some sectors are feeling the heat, others are actually heating up. It's fascinating how these global events create winners and losers in unexpected ways.
Absolutely. It's a constant reminder that the market is dynamic and complex. There's always something new happening, something to learn, and something to keep an eye on.
Speaking of things to keep an eye on, MarketWatch is reporting that Morgan Stanley now expects the European Central Bank to cut interest rates not once but twice in the coming months.
Hmm.
This Thursday and again in April.
That's significant. The market was already anticipating a rate cut this week,
Uh-huh.
but the prospect of another cut so soon after suggests the ECB is really concerned about the Eurozone's economic outlook.
Okay.
Lower interest rates can stimulate economic activity, but they can also put downward pressure on a currency.
And what about the U.S. Federal Reserve? Everyone seems to be waiting with bated breath to see what they'll do next.
Yes, the Fed's next move will be closely watched by investors around the world. Their decisions on interest rates have a ripple effect across global markets.
Feels like we're at a crossroads with a lot of uncertainty about which path the global economy will take.
That's a good way to put it. There are a lot of factors at play, and it's impossible to predict with certainty what the future holds. But that's part of what makes investing so challenging and so rewarding.
Speaking of challenges, we talked about the coffee shortage earlier.
Right.
It seems like this is a growing concern, not just in Europe, but potentially around the world.
It is a concern, and it's not just coffee. Other commodities are being affected by trade tensions as well. Bloomberg reported that China has suspended imports of U.S. logs and soybeans from 3 specific firms.
That's a prime example of how these trade wars can have unintended consequences, impacting specific industries and companies in unpredictable ways. It really highlights the interconnected nature of the global economy.
It does, and it reinforces the importance of staying informed and understanding the bigger picture. Investing isn't just about picking stocks, it's about understanding the forces that are shaping the world around us.
Well said. And on that note, I think it's time to shift our focus to the political landscape. President Trump is scheduled to address Congress later today, and Bloomberg emphasized that everyone will be listening for any hints about his future plans, especially when it comes to trade.
His address will definitely be a must-watch event. Every word will be scrutinized for clues about the direction of U.S. trade policy.
I have a feeling the markets are going to be on edge until then.
I wouldn't be surprised this level of uncertainty tends to breed volatility.
So we've got a lot to keep our eyes on: the ECB and Fed meetings, the ongoing trade war, President Trump's address to Congress, and of course the ever-volatile crypto market. Anything else we should be watching out for?
Well, besides those major events, I'd also suggest paying attention to economic data releases. Things like inflation reports, employment figures, and manufacturing activity can give us valuable insights into the health of the global economy.
So we're talking about looking beyond the headlines and really digging into the numbers.
Exactly. It's all about connecting the dots and understanding the underlying trends that are driving the market.
Sounds like it's time to brush up on our economics.
Always a good idea.
We've covered a lot of ground, but there's still so much more to explore.
Indeed. And while uncertainty might feel overwhelming at times, remember that with uncertainty comes opportunity. Those who can navigate these turbulent waters with a clear head and a well-defined strategy are often the ones who come out ahead.
That's an encouraging thought.
Yeah.
So for our listeners who might be feeling a bit overwhelmed by all this information, what are some key takeaways they should keep in mind?
Well, first and foremost, don't panic. Market fluctuations are a natural part of the investing cycle. Second, stay informed, keep up with the news, do your research, and consult with a financial advisor if needed. And third, remember that even in times of turmoil, there are always opportunities for those who know where to look.
Those are some excellent points. And on that note, we'll be taking a quick break. When we return, we'll wrap up this deep dive with some final thoughts on navigating the current market landscape.
We've covered a lot of ground in this deep dive.
Yeah.
And as we wrap things up, I want to circle back to a theme we touched on earlier. The idea of finding opportunity amidst uncertainty.
Yeah, it's easy to get caught up in the negative headlines. But as you've pointed out,
Right.
there are always bright spots if you know where to look.
Right.
For example, earlier we talked about the potential upside for Canadian copper miners and European defense companies.
Yeah.
Are there any other sectors or companies that have caught your attention?
One area that I think is worth watching is the healthcare sector.
Okay.
Healthcare tends to be more resilient during economic downturns
Yeah.
because, well, people still need medical care regardless of what's happening in the stock market.
Right, that makes sense. Are there any particular companies within the healthcare sector that you're keeping an eye on?
I'm hesitant to give specific investment advice,
Okay.
but I always suggest focusing on companies with a solid track record of innovation and strong financials.
Right.
Look for those that are developing groundbreaking treatments, improving healthcare delivery, or addressing unmet medical needs.
Solid advice. And what about the tech sector? It's taken a hit recently, but are there any areas within tech that you think are poised for growth?
The tech sector is incredibly dynamic. While some areas might be facing headwinds, others are ripe for innovation.
Yeah.
Artificial intelligence, for example, is rapidly transforming. Industries and companies that are at the forefront of this technological revolution are well positioned for the future.
It seems like every day there's a new breakthrough in AI. It's hard to keep up.
It certainly is a fast-moving field, but beyond AI,
Yeah.
I'd also keep an eye on companies that are leveraging technology to solve real-world problems and adapt to the changing needs of consumers.
Okay.
Think about areas like sustainable energy, cybersecurity, or even the metaverse.
The metaverse, now that's a whole other deep dive waiting to happen.
Right.
It seems like there are always new opportunities emerging, even in times of uncertainty.
That's the beauty of the market, isn't it? It's constantly evolving, creating new challenges and new possibilities.
And speaking of possibilities, I wanted to revisit that MarketWatch article about Sycamore Partners potentially taking Walgreens private.
Uh-huh.
It sounds like this could be a pretty big shakeup in the retail sector.
It definitely has the potential to reshape the landscape, as you pointed out. Sycamore Partners might break up Walgreens if the deal goes through,
Yeah.
keeping the core U.S. retail business, but potentially selling off or taking public other parts of the company,
Right.
like the British pharmacy chain, Boots, the U.S. healthcare provider, Village MD, and the U.S. drugstore chain, Duane Reade.
It's interesting to consider that what might seem like a breakup on the surface could actually unlock value for different parts of the business in the long run.
Exactly. Sometimes change, even when it seems disruptive, can be a catalyst for growth and innovation.
Well, I think that's a great point to wrap up on the idea that even in a world of uncertainty and volatility,
Yeah.
there's always potential for positive change and new opportunities.
Absolutely. It all comes down to staying informed, being adaptable, and having the courage to embrace change and, of course, never stop learning.
That's some sage advice. Well, this has been a truly fascinating deep dive into the world of global markets. Thank you for sharing your insights and expertise with us today.
It's been my pleasure. Always happy to delve into the complexities of the financial world.
And to our listeners, thank you for joining us on this wild ride through the headlines. We hope you've gained some valuable insights and perhaps even discovered some new investment ideas.
Remember, knowledge is power, especially when it comes to navigating the markets.
We'll be back tomorrow morning with a fresh batch of headlines and expert analysis. Until then, we encourage you to stay curious, stay informed, and as always, invest wisely.
And may your portfolios prosper.
That's a wrap on the deep dive for Tuesday, March 4, 2025. We'll see you all tomorrow morning with new headlines from major financial magazines.